Welcome to The Explainer. Today, we're diving into two massive stories that are really moving the markets: a huge rally in Bitcoin and a pretty controversial news statement from global central bankers. And what's really important is how these two things are connected. So let's just jump straight into it. We're not even 2 weeks into the new year, and already Bitcoin has rocketed up over 10%. It's been a violent rebound, and frankly, it's catching a lot of folks off guard. So you gotta ask, right? What is fueling this fire? And more importantly, could it be connected to this really controversial news statement that just came out from global central banks? That's the core of what we're going to unpack today. Okay, so here's how we're going to break this down. First, we'll look at that wild Bitcoin rebound. Then we'll get into the central bank statement that's got everyone talking. We'll break down the three big critiques leveled against it. The independence question, the whole stability illusion, and whose interests they're really serving. And then we'll put it all together and connect the dots. All right, first up, Bitcoin. The price action lately has been absolutely dramatic. This powerful move has, as they say, incinerated the short sellers. The people who were betting that the price would go down. Well, when it shot up instead, they got squeezed, were forced to buy back in, and that just threw more fuel on the fire. So if you look at the charts, the technical picture is pretty fascinating. Analysts are all pointing to this key trend line. Think of it like a solid floor under the price. And as long as Bitcoin stays above that line, they see a potential path towards $100,000. But, and this is a big but, that's just one side of the story. To really get what's driving this, we have to zoom out and look at the much bigger economic picture. Okay, now let's pivot to that second major story. This all revolves around a joint statement that came out from some of the world's most powerful central bankers. And let me tell you, it has kicked up a real storm of criticism from market analysts. So here it is, the key line from their message. Now, central banks say this to reassure us that their policies are designed to keep things stable and manage inflation for everyone's benefit. But critics have jumped all over this exact sentence, basically deconstructing it into what they're calling three core fallacies. All right, so let's dig into that first critique, and it's a big one. It questions the very foundation of their statement, this whole idea that they are truly independent. So the argument here, from the critics, is that these central banks aren't really independent at all. They say these banks are essentially forced to print money, inject liquidity, just to keep government debt bubbles from bursting. And their leaders? They're chosen by politicians and financial elites, not the public. At the end of the day, critics argue their main job has become managing and distracting us from the slow but steady devaluation of our money. It's a powerful critique that questions their entire purpose. And this quote really just sums it all up, doesn't it? The claim is that their primary role has shifted from serving the general public to protecting the interests and assets of the wealthy. And that leads us right into the second big critique. This one zooms in on that phrase, price stability, and asks a really simple but powerful question. Stability for whom, and for what exactly? Yeah, and just look at this. It lays out the critics' point perfectly. On one side, you've got financial assets. We're talking stocks, real estate, gold, at historic highs, fueled by central bank policies. But on the other side, the share of the economic pie going to workers' wages is actually shrinking. So the question critics are asking is that what stability looks like? In fact, the argument is that far from creating stability, these policies are the primary cause of instability. According to critics, the endless liquidity injections, which you can see make up the biggest chunk of the problem here at 45%, combined with soaring public and private debt, are what's really driving the system towards a crisis. Okay, so if asset prices are soaring for the wealthy, but wages aren't keeping up for everyone else, this brings us to the third and final critique. Who is really benefiting from this system? And critics are pointing to proposals like the digital euro as a clear example. The plan would basically have citizens trade their physical cash for a digital version that pays zero interest. Meanwhile, the central bank could invest that physical cash for a return. The question is, who captures that profit? The conclusion from this entire line of criticism is stark. These policies systematically favor asset owners over wage earners, which directly contributes to widening wealth inequality. All right, so now let's connect the dots. We've just walked through these three huge critiques of the central banking system. How does all of this circle back to that violent Bitcoin rally we started with? Well, this lays out the whole argument in three simple steps. First, the argument. Central bank policies are devaluing traditional currencies. Second, the effect. Investors are seeking refuge in scarce assets like gold, real estate, and yes, Bitcoin. And third, the result. The prices of these assets get pushed higher. So here's the crucial takeaway. The Bitcoin rally isn't just about crypto. It's a symptom of a much larger trend, a rotation of capital out of traditional currencies and into assets that are seen as a store of value. And this concept right here, monetary degradation, this is the engine driving this entire trend. It's the belief that your money in the bank will be worth less tomorrow than it is today, which analysts believe is pushing investors to look for assets outside of the traditional system. And so that leaves us with the big takeaway question, summarizing the central tension in the market today. If faith in the traditional system continues to erode, what does that mean for the value of everything else? Thank you for joining this explainer.